Hello, everyone. Mark here at Tessery. We just got through the CPI day, and Tesla closed in the green finally. It wasn't too convincing of a close, but it's $245.34 as a closing price, which was an increase of $3.15 per share, and as a percentage, is 1.3% over yesterday. And there was a pretty big move in the morning, and we kind of sort of anticipated it if it was going to be a bullish move. And the reception of the CPI didn't seem very authentic off the bat. So I kind of knew in early morning that I don't think it was going to hold. And but anyways, we drew this line that in a bullish context, you would see a little bit of buying. And we kind of basically saw what we kind of anticipated, at least until around 1 hour into the open. So by 10:30, it was already selling off. But in my eyes, because of how other CPI days work, and of course, historical price action isn't always going to be, replicatable in any way. But we've seen price action where it's a gap up and a flat trade all day long, and we've seen other CPI days where it's a gap up, buying into the morning, and a complete sell off during the day. So we saw a good move in the morning, and so by 10:30 a.m., we are up 3.34%, over $8 a share, and it started to sell off basically around 10:30, and the lowest we saw was a move 3.5% down at $242.98, and we closed $3. Two something above that during the course of the day. So it was a very flat trade for the rest of the day. And, a lot of people were probably wondering why, the CPI's headline came in 0.1% lower year over year, but the core came in at 4.7, which was in line with consensus. And I kind of said we would need to see more of a drop in core more so than much headline. But how the market received it was a little bit different. So let's take a look at some talking heads and see what they had to say about the results for CPI. So let's switch over to the browser. First things first, we want to talk about jobless claims. Jobless claims actually came out higher than what a lot of people expected. This was almost not really much of a talking point even for myself, thinking that jobless claims wouldn't be all that notable, but it actually was pretty notable. It was definitely more than the previous number. It's definitely more than consensus. And this, and we'll read a comment from Nick Timmeros about this. Here's the consumer price index. So month over month, we have 0.2% for core and the regular CPI. Year over year, like I mentioned, 3.2 versus 3.3 consensus, and inline consensus core CPI year over year. I believe the month over month core was a little bit lower, 0.16. So let's go ahead and take a look at some Twitter commentary. So this is Mohammed Alarian. You probably see him on Bloomberg and you see him on CNBC. He's a regular contributor. He has a good kind of perspective on the market. So I like to read him every now and then. He says U.S. inflation came in as expected with monthly gains of 0.2% for both headline and core CPI. The annual rates are now 3.2 and 4.7 respectively. These numbers will come as a relief to those who worried about the July data would already reflect price pass-throughs from higher energy and food prices. So we did talk about that, how energy has been getting a little bit more expensive. I'm talking specifically gas prices have been getting a little bit more expensive. And he was saying already reflect price pass-throughs, meaning we're seeing it in the current data where food prices are going up and gas prices are going up still, right? Oil is a little bit higher and food prices are definitely higher, kind of based off the idea of the limited exports from the Ukraine, kind of increasing the grain costs around the world, corn and wheat. He goes on to say they will reinforce the majority market view that the Fed will refrain from hiking in September. The implied probability of a hike dropped from some 15% to below 10% following the CPI data release, so about a 5% change in the market's betting odds that there would be a hike in September. Now we have a couple more data releases until then. We're 39, 40 days out from that meeting. So there still can be a narrative change depending on these so-called price pass-throughs for energy and food prices, how is that going to reflect in the CPI and PCE reports that will come out before the next FOMC? So Mohammed had another tweet in regards to jobs. So coupled with CPI inflation data, this morning's weekly initial jobless claims number of 248,000 will reinforce the already strong market view that the Federal Reserve will not hike interest rates in September and that cuts are likely to follow just a few months later. So even Mohammed is, now to be fair, Mohammed's been really critical of this Federal Reserve. This goes back for years. He doesn't really like how they're handling it. He thinks they missed the not transitory inflation a couple of years ago, and they are mishandling the rate increases now. So we have a tweet from Nick Timrose. Nick Timrose is basically the inside guy when it comes to the Federal Reserve. It's almost like he is the speaker for the basically the Fed whisperer. He speaks for Powell, you could say. I wouldn't be surprised if him and Powell talk a lot off of the record. And Nick Timrose is pretty much on point when it comes to his perspective on Federal Reserve decisions. He says in this tweet, the last two inflation readings call into question whether the Fed will need to raise rates again this year, as officials projected in June, and makes a September hike unlikely. So he kind of agrees already. So as this is being talked about openly by these two figures, I would say this is something that you do want to kind of keep note of, even considering the price action that happened in the market today. And we'll talk about that in a couple of minutes. He also went on to say that wages are slowly ticking higher and quits are still netting people a little bit more as far as pay goes. But he does say in this next tweet, July CPI could build a case for a Fed pause. And here is an excerpt from Susan Collins, the Boston Fed president, in an interview earlier this week. So this is before CPI was released, but she said, my read of the data that we have so far is that we are near or perhaps at a sufficiently restrictive level of monetary policy to hold for some time. And of course, she needed to see the data. She needs to see data to back that case up, but she is one of the more dovish people. One debate from here centers on what extent officials want to see economic activity moderate above and beyond the inflation slowdown. So Barkin says, I don't want to declare a reacceleration too quickly or declare inflation settling too quickly. So he doesn't want to. But basically what happened with all these Federal Reserve presidents and the governors is that they got really burned and their credibility was really damaged from just a regular person's view of what the Federal Reserve is handling, how they're handling things, and what they're doing about inflation. They really got their public image hurt really bad with the comments. And this was a Federal Reserve board, and this is a consensus that inflation was transitory. And that when the rate hikes were so late and they started hiking at the fastest rate in history to compensate for their lateness, you could kind of blame this market performance, the destruction of equity of people, basically based off their inability to understand inflation. So I think that's all that Nick has to say. He went on to mention something about the New York Fed's gauge of underlying inflation. This is another way that inflation is tracked. It ticked down to 3% month over month from 3.2% from the last reading. The prices only version of this measure fell to 2.3% from 2.5%. So in different ways, inflation is measured. Inflation is getting down to a 2 to 3% area, which is where they want to be at. This is where the Fed themselves say they want to be at. So what do you want to do? If you're getting close to 3% or at 3%, and some other measures, excluding some stickier bits of inflation, be it rent and shelter, which is coming down a little bit, why do we need to keep hiking when you're seeing pressure on regular American citizens who are having trouble staying in a job, keeping a job, and people can tell all the time, the labor market's really tight, but we're having market increases in unemployment. So how unemployment is measured, be it through the Bureau or the BLS, the Bureau of Labor, or from private measures. Like, the reality is the individual, like the regular, normal, average American citizen sees the economy in a totally different way. There is a true disconnect through the means that the government and especially the Federal Reserve is tracking employment. I believe, like, if you just talk to regular people, average American citizens, not the super wealthy, not even the upper middle class, but what makes up the majority of this country, they are living on their credit cards. They are not making a living wage with dual income. The food prices are out of control, and if energy costs are going up as well. Rates are not going to fix that. They just aren't. Like, food prices are sticky. Inflation is just a measure of change year over year or month over month. Just because inflation goes down to 2%, it doesn't mean food gets cheaper. They need to. There's structural problems in this economy and the supply chain that the rates themselves just won't fix. All it does is hurt people that are living on paycheck to paycheck and on their credit cards, getting charged 30% or something like that just to live. So let's talk about the price action before we go to the charts today. There was a strong sell-off, of course, over the day. Even in the indexes like the S&P 500 saw a reversal. I don't remember if it exactly was this number, but I want to say it was like 1.7%, a reversal from the high to the intraday low. So on Spot Gamma's Twitter, or X, Spot Gamma says this rally doesn't smell too stable. And this was posted pretty early in the morning, I believe around 10:30 when the selling started. Let me scroll down. Yeah, so just before the selling started. So he was tracking the interest in puts and calls. So he says the rally doesn't smell too stable as traders are buying puts into the rally, causing the HIRO indicator to decline. Not much call buying at all. And it kind of reflected that's how, that's what they wanted to do. They really wanted to short the market. All the put buying and not the reciprocal call buying just put a lot of downward pressure on the market, and it didn't stop pretty much at all. And we can kind of see that here. Let's go over to the Max Pain on SPY, which represents the S&P 500. You're seeing a lot of puts. The put to call ratio is definitely favoring the puts. As far as open interest goes, like you were seeing the 440s, but I really want to pay attention to the volume. And you're seeing how many, look, this peak is 446, but we do know, where did it close? It closed right under 446. That's not a mistake. That's not coincidental. The market was wanting to get paid out. They are buying puts like crazy, and they put a lot of puts in the money. Like, so yeah, the 445s didn't hit, but all these 446s and up hit. None of these calls hit, so only the 445s. And look at the 445s; they're really not that notable. 79,000 compared to at 446, 199,000. At 447, 300,000. At 448, 300,000. So even though there's a lot of puts, a lot of the puts got paid. We know who those puts are. Those are market maker puts. Those are the ones that they're buying. Those are not the ones they're selling. They're selling all these calls instead. And it really, really dragged the market down because, it's sell the rip. Every day, it's sell the rip. If you see any green, you sell that candle immediately. And you're seeing it play out. And you're saying to yourself, but what about inflation? Well, I still am of the opinion that without the core reflecting a bigger change, the market will be happy just to be flat for today. What about tomorrow? Maybe flat again. We'll talk about it in a second. So before we switch over to the charts, I just want to look at how the volume for Tesla options are playing out, because tomorrow is the weekly expiration. Of course, it's Friday, and looky here, we close at 245, just above what is the highest peak on the volume of puts. 130,000 puts expiring tomorrow at 245. And there is a lot of calls. I don't know who's buying these calls. It's probably retail. It's probably retail who buys this. If this closes above 250, I'll be super surprised. We already kind of talked about this, and that's why we drew the purple line on our chart, because even yesterday, 250 was a very noticeable strike for calls. And at 185,000 calls, and this was building up by tens of thousands over the course of the hours of the trading today. It was just like popping up. But so was the puts. The puts are popping up too. But we don't know who owns these puts. We don't know who owns these calls. But having so many calls skewed to this strike is going to make it kind of problematic tomorrow. And if these puts are not owned by retail, and you could see Tesla coming under this strike price of 245. PPI could come in an interesting way that might spark a rally, and I know we've talked about it in the past that PPI might be the confirmation the market needs before they go ahead and start buying again. But we'll look at some examples of how the PPI looks, how CPI looks. Is there a correlation? We'll look at that in a couple minutes. So let's go to the charts, and we'll take a look at Tesla. Okay, so we're back on Tesla. Thankfully, Tesla hasn't sold off in the after hours. So we're recording this at 2:51 p.m. Pacific time. So that's 5:51 Eastern time. So just before 6 p.m. on the 10th of August, 2023. And we talked about that 250. So this is where I was drawing this kind of line where I thought it would be the cap. Meaning that this is the ceiling for the price for today. Might be the ceiling for the price tomorrow as well. And that's why I kind of drew it out into the weekend. So I didn't know if they would really want to pay out the 250s. It kind of also shows that this was the resistance for previous trading days as well. After that really sharp sell-off, that 250 might be impossible tomorrow, regardless of how good PPI is. It might be very difficult to get there, and maybe they would prefer to close under 445 and pay it themselves out on all these puts that they bought, if they bought the puts, and it's possible, right? So let's talk about what is the possibilities of maybe PPI being the confirmation that we need, and thusly we will maybe bull harder. I wouldn't be too optimistic. Just know, of course, we're in a short-term downtrend. It's hard to be optimistic. I think you've been pretty disappointed with Tesla's price action as well. So here's the first circle area when it comes to a CPI and a PPI day. So this was a gapped up. It gapped up just like we did. It gapped up this is a Tesla. It gapped up 2.3%, and it sold off intraday into the morning. It sold off 2%. It got bought back up a little bit. So by the close, really not that remarkable. Let's see, Wednesday. Yeah, it really basically closed near the earlier low of that day. So that CPI day, regardless of how good it was received, and even when Tesla was more in an uptrend, it didn't have the best reaction, but it was still green, like it was green today. So what about the next day when PPI comes through? So PPI did gap up, and it went upwards of 1.1%, but then it sold off again. Okay, it sold off again to 1.6% intraday. Then it started getting bought up a little bit, and by the end of the day, it was actually up pretty considerably. Where is this thing ending? So let's see. And this is what I mean. Like maybe it takes a confirmation. So if this is the close, and let's see. So it closed up 2.21%, even though it had a sharp sell-off in the morning, and it was consistently bought up the rest of the day. Now, like I said, this context might be a little bit different because this was a week before earnings, and things weren't as dire as we are facing the situation right now. Let's look at another CPI day. This is a gap. This one gaps up, and it sells off intraday the same way. So that's pretty common. So this gapped up like 2%. Oh, no, I'm sorry, not 2%. It gapped up like 2.3%. And over the course of the morning, it sold off 1.7%. And then it got bought back up again in the middle of the day. But this was a little bit more impressive of a buy. And it was up something like 3% from the intraday low. PPI comes in the next day, kind of sells off in the morning, and then it sells off into the close to be slightly down for the day. And then you can see here on the day after PPI, it sells off pretty severely, but opens up flat. So I think these are the two buying spikes that we saw during this possible head and shoulders pattern from the beginning part of the consolidation in June, where you're seeing strong buying over here at the 247. It was just like quick reversals, even though they were sold off in the morning. Let's look for another one. So here's another one. Here is CPI that gaps up again. So this gaps up to around 3.2% in the morning. And once again, it sells off during the course of the day. At the lowest point, it sold off 4.4% from the high. It kind of closed around there as well. So overall, it was flat to down like 0.27% or something like that. So PPI comes in the next day and it is flat until the end of the day, where it gets bought up a little bit. So that could be a good thing. So if it was to give a rough close, it was up about 3% for that day, which kind of gets you to the high of the CPI release in the morning. It also, on the Friday, it gaps up and sells off completely. Tesla, like when you look at Tesla's like price action, it's so super violent. It's really difficult to deal with sometimes. Here's another day where this is the day I thought we could have had something similar to this, where it's a gap up, and in the morning you see 2%. During the course of the morning, you see upwards of 2.5%, and then it stays flat for the rest of the day, closing at 1.2%. PPI comes in the next day, it gaps up pretty strongly, okay, and that was like something like 2.5%, but it sells off severely. And by lunchtime, Wall Street time, it dropped 5% from the high, and then it closed desperately low at 6% from the high. So thankfully, if that's not hopefully going to be our case tomorrow, what's a little bit different, what we need to keep in mind is that we're doing PPI on a Friday, which is expirations expiring. So that's not as common. That's not as common. So it could have a different price action kind of flow and pattern that we're not used to, as it tries to get itself to whatever pain point would be best for the market makers and the options that they've sold. Here's another one where they gaps up and it kind of stays flat for the rest of the day. And let's see, where is Tuesday? So, and it gets bought up at the end of the day. So for overall gain of 4.6%, PPI the next day kind of sells it off. Let's see. About one. No, wait. This is the open. Yeah, so it closed a little bit red. It closed down 0.7%. So PPI doesn't necessarily mean to confirm, but it could mean to confirm in a scenario where there was a sell-off intraday. And here's another CPI and PPI. It was a buy all day from being gapped down in the morning, but bought all day for a huge gain. And PPI had some very slight buying, but mostly flat trading for the rest of that day. Let's take a look at January or December. This is January, but December's inflation. So it gapped down in the morning a lot, 5%, and then it came back basically just slightly above flat. PPI then sold it off, and then it got bought back up a little bit by the end of the day from 6.5% from the lows, but still down about 1% for the day. Then it started getting bought up after all that was done. And so this is one of the times where it was a Friday expiration. So this is something to kind of keep in mind, depending on how they want, regardless of what PPI is going to be tomorrow. If their desired motivation is more based off their max pain, basically the strike that best serves them for their options, the price action may be reflective of something Similar to this, where it's a little bit more to the downside, maybe a gap down as well, depending on how PPI works out. Hopefully, we're not in deflation like China is, right? We don't want deflation, but something that Elon has warned about. Here's another day where there was a gap up. So this gapped up, and this is from the December. This is the infamous December CPI, where everyone thought, oh, that was a great report, right? And then it gapped up 4%, but the whole market sold off severely, and it sold off 10% over the course of the day, and it kind of sold off the rest of the year. And we kind of remember that. And after that selling was done, that began our rally at the beginning of this year, on the 3rd, right? So it is not unheard of to have that kind of gap up and sell off. Here's one where it was up. It was up like 6%, stay flat for the rest of the day, which is one of the things I would have thought. Sells off on PPI, but gets bought up again, and then gets bought up and goes green. So looking at these historical price actions for CPI and PPI, we've had many times get not only just gapped up, but gap up, get bought up, and sell off all day, only to have a day where trading is a little bit better on PPI, but there's no guarantee that's going to happen this time around. And knowing the context of Tesla, it's still very bearish. We didn't make a noticeable high yet. Like I said, we really need to get, if you really want to be very bullish, 253 is where you want to be. I think that could say, okay, we took out all these highs. We're kind of getting to the point where a significant high was made. Then of course you'd want to beat out 264. That's a tall order. I'm sorry. That is going to be 8%, and I don't know if that's really possible for the look of Tesla right now. It's still kind of teetering on the edge. It did find support and some buying off of the top of the gap, but that's just based off the CPI exuberance, in which was quickly sold off. So what can tomorrow look like? Man, I just don't think they're going to pay out the 250s. I think they really want to play out I think they really want to pay out their puts tomorrow. So let's say PPI comes in a little bit better than expected. Let's say, who knows? Let's do that. Let's do a guess. So let's say it gaps up again, and this will do a very small gap, maybe 0.4%, and then it'll go up a little bit and then go down like this. It won't make a new low, and then trying to stay, it really would want to stay like under 245. That's one particular scenario, and we'll change that color so we know. I did not change anything. I'm just making a new line. 1 second. So that would be our guess for something in the red. And if it's somehow bullish for some reason, then they want to, then you'll know who owns the 250s and who's been buying those 250s. It's not you or me. It's the market makers. It's the big money. It's the funds. It's the institutional people. What could that look like? It's hard to say. I wonder if it'll be flat to open, but let's say it gaps up again, and it'll just be, I guess, slow buying above 250, maybe. Or if it's a gap down, it'll be something like that. But otherwise, the worst case scenario is always going to be how we drew these purple lines, where by the end of the week, you'll be through the gaps. And what can that be? It's really a report that shows deflation in PPI and producer costs, that kind of similar to what the Chinese are experiencing right now. That's the only thing. But even this 244 close, man, that's so much better than it's so much better than being down 3 or 4% over and over again on Tesla. it's been what? It's been maybe 15, 16 trading days, and we've only had 1/3 of them green. And those green days are not that substantially green, whereas the red days are pretty substantially red. So wish us luck tomorrow. Hopefully we can get above 250, and so we can know the people that are buying calls are the people that really, really matter. And maybe that could be the sign of something good to start out next week. But if we are red when we open and we're starting this trade flat for the rest of the day, just go look at the Max Payne site, look at your options chain, see where the calls are being stacked at. If there's a lot of call buying at 245 and 247.50, just know that they're probably not going to hit if the trading is very lackluster. So I know there's a lot of bullishness when it comes to Tesla options trading. They don't really want to pay those out. But I hope they do. I hope the 250s get paid out. I hope you get really, really good trades tomorrow and the Tesla goes up, and we can somehow put this correction to bed. Otherwise, we can say hi to 220 or something like that. Thanks so much, guys. Appreciate you listening. Have a good night. Bye.